I'm bullish on energy and agriculture. I'm becoming less bullish on like base metals because we're heading into a recession. I don't even talk about uranium that much because nothing's really changed on the supply-demand fundamentals except for the demand side gets better and the supply side gets tighter. You can't just jump into this field and expect to have, especially if you're not mentally and psychologically prepared for that volatility.
Hello and welcome to Commodity Culture Interviews, where we give you an overview of the commodities sector. Before we start, standard disclaimer, do your own due diligence. None of this is investing advice. My guest today is an analyst in the commodities space and the host of the Actionable Intelligence Alert podcast, where he discusses investing and speculating from a deep value and contrarian perspective. He also focuses a lot on energy, which is what we'll be focusing on today. Mr. John Polomny, welcome to the program.
Happy to be with you.
Awesome. So let's get started with how you got started on your own journey in investing. How did you start and what drew you to the commodity space specifically?
Well, I'm in my 50s, so I started investing probably when I forged an account, opened, I think when I was 13 or 14. I filled it out and I think this is back before the internet days, obviously. And I was started out with options. I got an old technical analysis book on how to do point and figure charting. And the worst thing that could ever happen happened. I had early success. And that made me think that I actually knew what I was doing. And then subsequent to that, I got wiped out. So it's just been a journey over the last few decades. I would say that it's been a maturation process. I wish that I would have focused earlier on in my career, or not my career, but my investing journey, by kind of finding the top performers and then kind of trying to figure out what they did to be successful. So I had a lot of up and down years early, probably just based on luck more than anything. And then I took a conscious decision about, after the last, I went through the tech crash and then the housing bubble, and I kind of started getting wised up after the tech bubble. And then I just sat down one day and said, who are the successful people in this business who have been the successful investors? And let me go get with the internet. I mean, it's easy to get all the information you want. So I started reading, all about these different guys, and throughout history, even women. Hetty Green, she was an interesting character. And they all had a common theme. They kind of made their money based on what they paid for a security, not the particular security or but it's buying things that are cheap relative to their value, intrinsic value, or a value that's not realized, and then waiting for the market to realize that value and reprice the security. So that's kind of how it went. And then I'm not really wedded to commodities or resources. I have an interest in them just because I've always liked them, just because I like digging things up and stuff like that. But it was so blown out after COVID, and just with before even COVID, the lack of investment drew me to it. It just was obvious we were going to see another upcycle because of the lack of investment. It's a very cyclical space, and it goes through booms and busts. And if you can figure out what causes the booms and busts and then get yourself positioned accordingly, you can make tremendous amounts of money. So that's kind of where I'm at now. But I'm not wedded to just that. I mean, I'll look for anything that's cheap, and then if it has a catalyst for a re-rating, then I'll research it further.
Well, speaking of commodities being cyclical, there are a lot of people out there who are saying at the moment we're entering a commodities supercycle, kind of a switch from overvalued tech stocks and momentum stocks to real assets. Do you feel the same way? And how do you see the commodities sector developing as we move forward here in 2022?
Well, when we say supercycle, I mean, it depends how you define the term. I think that we've had years of underinvestment across the resource base, whether it's oil or copper or whatever. And so from the supply front, I think that that's a big driver, even before what's happened recently with the outbreak of World War III, as some people are calling it. But that cycle that I'm looking at is probably for the rest of this decade, right? Because in order to solve these problems of undersupply, it requires, billions and billions of dollars of investment, hundreds of billions of dollar investment, and then the ability and the desire to go out and find these things. We just don't have that. We have the maligning of a lot of the extractive industries around the world. I mean, we don't have time to get into all that, but I think most people watch this probably understand the ESG mandates. I know we're going to talk about coal later. You're not going to open another coal mine in the Western countries ever again. I mean, we can get into that later, but so you have a lot of headwinds against supply, but you also have a lot of tailwinds from demand. I mean, you have emerging economies in Asia, like populations in India and Indonesia and all these developing countries, billion people in Africa. You probably have, 2 billion people that never flipped the light switch in the world. So I think I'm a long-term bull on energy, and we can get into that a little bit more, but I would caution that in a secular cycle that can last a decade or more, you can have cyclical, maybe 6 months to a year of drawdowns or pullbacks, just based on recessions in certain countries, changes in sentiment or monetary policy. So although I think that if you, it's not an industry where you can just buy and forget. You have to understand the cyclicality. You kind of have to understand where you are in the economic cycle. So I think there's opportunities, but with the caveat that you have to be very active, I think.
So let's touch a little bit on ESG as we get into energy. There's a lot of governments pushing the new green economy, pushing for renewable energy, wind and solar, while at the same time reviling fossil fuels and claiming that there's going to be some kind of dramatic shift that's going to happen in a very short time frame. How do you see that all playing out? Do you think we're in for a reckoning as people are overestimating just how quickly we can move into straight renewable energy?
Yeah, this is something that I think really gives small investors and speculators an opportunity to really get over on institutions in the mainstream. We have a situation. I mean, let's look at energy, for example, right? Energy, everything that we do is a derivative of energy. Okay. And the reason why we have the standard of living and the wealth we have and the achievements we have is because of the fact that we've over time found and used more and more dense forms of energy, going from animal dung to biomass to wood to coal, all the way up the chain to, nuclear fission. These are denser and denser types of fuel, and they allow for accumulation of wealth. If you go back to medieval times, if you could study this, is very interesting. Energy return on energy invested. Your energy return on energy invested in medieval times when you were just a peasant was probably 2 to 1 or 3 to 1. So you were relying on the sun's inputs for that year, the weather inputs, to get enough food for yourself and your draft animals so that you could make it through to the next. So there was no leftover wealth. There was no accumulated wealth for the sciences or for medicine or any of these things. And so it concerns me. It kind of amuses me when we say, they have windmills in the Netherlands. They reclaim a lot of the land, and you go and look at those windmills now that were built in the 15th, 16th century that they used for pumping water and reclaiming. Those are museums now. There's a reason, because James Watt invented the steam engine. It was more efficient to use steam-driven pumps. So I don't like to get too far into this. These are math and physics problems. Someone that tells me that they're going to run a major industrial economy on wind and solar and battery storage doesn't understand the physics and math behind that. I'm not going to really argue about it anymore. I think it's pretty obvious. We have real life labs, Germany and their energy transition, and what what California is trying to do. These are labs that people can watch and compare to, the reason we use fossil fuels is not because there's greedy fat cats at Exxon's, because oil is very ubiquitous. It's easy to transport, it's easy to use, and it's fairly low cost. I mean, you think 100 years ago, the average person didn't go probably more than, more than 100, maybe 150 years ago, didn't go more than, 20 or 30 miles from wherever they were born, the average person. Now you can spend $3 at the pump and an average car loaded up with 4 people and all their stuff and go, that same distance. So that kind of, that's where I'm at on that. Am I against being a good steward of the environment? No, I'm not against that. But human progress, Alex Epstein's done a lot of work on this about how fossil fuels are should be celebrated because they've allowed for the civilization that we have. And then when you talked about energy transitions, I would just try to encourage people to look at somebody like Vaclav Smil. He's done a lot of work on this. He's a Czech, I think he's a Czech professor. He teaches in Canada. But he's spent his whole career studying about energy transitions, and they happen over decades. They don't happen by government fiat over a period of a year or two or a political cycle. So I don't know what's going to happen in the future. Obviously, technology advances. Maybe battery technology will become a lot cheaper, but that doesn't. They seem to be running into some chemistry issues and physics issues there, and just the amount of materials. But right now, I think maligning fossil fuels, it's like yelling at this industry that basically enables the civilization that we have. So that's about all I like to say on that. This is a very touchy subject, obviously, for many people.
Well, let's get into another touchy subject right away then, and that would be coal, one of the most hated commodities. Is there still opportunity in the coal sector, or has that ship sailed?
So coal is very interesting. I mean, you have to differentiate. There's two types of coal, right? There's metallurgical coal, which is used in making coke, which is the input into basic oxygen steel making, which is 80% of steel making. Without steel, I think most people would agree you're not going to have civilization. Steel rusts over time. And I know there's people working on technology, so I think metallurgical coal is definitely has a future until they get a different process to make steel. But when you're talking about thermal coal, this is the thing that was going to go away. Is the burning of thermal coal a good thing? No, it's not. I mean, you're releasing all kinds of potential. In the US, it's not as bad because we have so many SCRs and scrubbers and monitoring technology that can get it down to, down to these minuscule amounts of mercury, all these things. Is it the best thing to do? No. But when you're a developing country and you're trying to raise people out of poverty, coal is, again, ubiquitous, easy to find, easy to use, easy to transport, easy to store. And no, I don't think it's going away. I think the demand, like in the Western countries, is being forced down by fiat, by the government, but it's not going to go away. I mean, you see right now with natural gas prices at $8 an MCF, you see a lot of where plants are able to, where they have dual fuel burners, they're able to shift between coal and natural gas. So you'll see some of that. But in the developing worlds, where thermal coal is going to excel, just because they have no choice if they want to develop develop. And what's so great about this is government's working for the speculator on this. I describe stupidity not as somebody being dumb or low IQ or not educated. We have this credentialed class of people that are making policy that really don't, I think, have a lot of real world experience. And telling NGOs and governments telling people like in India and Indonesia and these developing countries not to develop when we did the same, we use that product, is kind of hypocrisy. The other deal is on supply. You're not, how are you going to build another coal mine? So what I like about it is you have this kind of grandfathered in these mines. If you have a mine or you have assets that can produce coal, at least in the US, you're not going to open another coal mine here. Who's going to finance it? No bank is going to finance it. No one's going to buy the equity because all of these pension funds and equity funds, BlackRock, Larry Fink, all these guys, they're not going to buy your stock. So if you have grandfathered in, you have this demand that's steady or maybe slightly decreasing, but the supply is not going to be able to be increased. And, it's an extractive industry. So over time, it's akin to the tobacco industry. It's a hated industry that's not going to be allowed to grow, that's going to be maligned. Obviously, tobacco is not a necessary thing, but, power production is, and so is steel making. But you're going to have this, constant attack that's not going to allow for a growth in supply, at least in the West. And you're going to have this continued demand and continued use. So these folks are, you look at a company like Peabody, they had a bad quarter this last quarter, but they have the potential to, cash flow their entire market cap over the next year. And, what are they going to do with the money? They're not going to build another mine. They're just going to pay down debt, and buy back shares and probably increase their dividends. So I think that you see a lot of the companies, mining companies over the last year have spun off their coal assets, and they've been very high performers. Nobody wanted to buy them. Like Anglo American spun off one of their South Africa coal assets. Immediately, everybody took that stub and sold it, forced selling, and you could have walked in there and bought that stock. And then I think it's up 5 or 6 times since they did that. And that's happened over and over. So I think those are going to be cash generative industries that are going to be protected just because of the fact that inadvertently by government action, it doesn't allow for, increased mining of coal, at least in the West. Now in the East, just saw in India, they're telling all of their coal mines to ramp up and produce coal because they need the power. So I think there will be continued growth in coal use in the emerging markets. But yeah, I think I don't think it's over. No, not by any stretch.
Let's move on to oil, another kind of reviled commodity as well. It's a very misunderstood commodity because most people don't understand it's not only used for energy, it's used for basically everything that exists. Most used commodity there is, I believe. I've heard you mention on your program before that you think there's opportunity in oil, but at the same time, the big gains have probably already been made by people who got in much earlier than at this point. With the war in Ukraine and all these sanctions getting thrown around, has that changed your perspective at all on the situation?
I think, based on how I'm trying to game this out. Look, I mean, oil is so ubiquitous and so integral to everything that we do. Like I said, everything's a derivative basically of oil, whether you're mining, farming, transporting goods. Again, we have a situation where we already had the potential for a supply crisis, and now we have this war situation. I'm not going to get into all the barrels here, there, and everywhere, but my suspicion is that we're probably going to have a spike in price and it's going to take us up, maybe conceivably to the inflation adjusted highs. What we saw in 2008, probably we could spike to $150, $200 a barrel. I think you would want to be a seller then, because the economies just can't run on that type of oil price. I mean, you have a diesel price now. That's a whole nother situation. But for an example about how that was, kind of created by the pandemic, and now with this world, what's going on with this war, $6 a gallon diesel. I mean, you're getting to the point where you're going to start cracking these economies. They're just can't function with these prices. So I think this summer is going to be a blowout travel season. I think everybody I've talked to is going somewhere. You can't get a room, or, I mean, if you haven't got your plans made by now, you're not going anywhere. And I think that, with the jet fuel demand and people traveling, I think we could have a blowout on the oil price over this summer and into the end of the year. But I think it possibly could carry us up to a place where we'd crack the economy. I don't believe that the housing market is what cracked the economy in 2008. Is when oil went to $150 a barrel. The economy just could not function and went into recession. And then all the other things came unwound. It's like pulling the string on a cheap sweater. You pull it and then the sleeves fall off. So I think we could be looking at something similar over the next 6 months to 8 months as we go into the end of the year.
So natural gas is another commodity that has seen massive price increases recently, particularly in Europe. And with Russia producing so much of Europe's natural gas, the situation does seem a bit precarious. It's also essential for fertilizer production, so it affects agriculture. How do you see this playing out? And at the moment, do you see any investment opportunity in the natural gas sector?
Well, that's kind of a difficult trade. I mean, you have, prices so high in Europe that prices in the US now are going up because there's an arbitrage. People are trying to ship as much gas as they can to Europe to arbitrage that. I mean, there's basically a shortage around the world. It's not just in Europe, it's in Asia also. So now you have the Europeans where they have import facilities for LNG competing against Asian markets. This is why you have the Japanese coming out last week and saying they need to do emergency restart on their 23 reactors that have been shut down. So they're a huge importer of LNG. And so what you have is, a situation like in Europe. I mean, this could turn into like an hour-long thing, but real quick, you have people that are making poor decisions upon poor decisions upon poor decisions. I'm not going to get into the morality of what's happening in the Donbass, a place where nobody knew about 3 months ago, but everybody has an opinion on now. The Europeans, for whatever reason, are stupid. They are not, do I want to have somebody like Ursula von der Leyen? Most your listeners probably don't know who this person is. She's the head of the European Commission, and she and her unelected peers are making policy on energy in Europe, and they're going to destroy the European economies over their virtue signaling. Am I going to take my energy advice from Ursula von der Leyen and Robert Habeck and Olaf Scholz, or the chairman of BASF and Bayer, who said if we don't have natural gas and oil imports from Russia, the German economy will be bankrupt? So there are opportunities, but again, these prices are already so high and are going higher. Just going to seize these economies up. It's like just throwing a stick into the spokes of a front wheel. It's just too much. If you went to $150 barrel oil in Europe and the US over a 5 or 10-year period, the economy can adjust, people will adjust. You can't do that in the space of 3 to 6 months, or what they've done to the natural gas. And like you said, you've already mentioned the knock-on effects of high natural gas prices causing fertilizer plants to shut. This is even before the war started. Yara and other people were already shutting their plants down, and there simply isn't going to be enough nitrogen inputs. And now with the war in Russia and Belarus, potash and other things. So yes, you're going to have these derivative and second and third order effects. So there are opportunity. I'm bullish on energy and agriculture. I'm becoming less bullish on like base metals, because we're heading into a recession in the Western countries, and it's just without a doubt. Now, I think that these economies will respond like they always do, with fiscal and monetary policy, and then you'll possibly have another wave up. But I don't think you can go wrong. I don't think we've seen the maximum prices in agricultural prices, and like I said, energy prices. So yeah, I think there's still some opportunity. It won't be as much as it was like in the middle of COVID. That's my whole game. Just to finish this thought, everybody knows about the oil price now. Everybody knows about demand. The time to buy these things was, a year and a half ago, when oil was negative 47 and they told you it was the end of oil. That's when the real contrarians were buying companies at 10 and 25 cents that are selling for, $2, $3, $4, $5 now. So there's still upside, but it's not the same upside that it was. It's not as juicy as it was back then.
You touched on the emergency reactor restarts in Japan. So let's move on to uranium now. This feels to me like maybe the surest bet out there in the energy sector. I personally invested in it more than any other form of energy commodity. And I think barring some black swan event, it seems like the closest thing to a sure bet. Am I wrong on that? Or what is your current view of the uranium sector?
Well, it's the same thing. It has built-in supply and demand issues. If you just look at what Kazatomprom said, Cameco said I think it was last week was their earnings call. It's another place where you haven't invested enough money, and this whole industry's atrophied. You've basically been living off the investments that were made a decade or more ago. And so it's the same thing, we're seeing, I don't even talk about uranium that much because nothing's really changed on the supply demand fundamentals, except for the demand side gets better and the supply side gets tighter. All I do is go on the World Nuclear Association website, and this reactor's starting. They just poured the foundation for that reactor. This country's going to expand their development, but I don't see anybody opening new mines. And so if you have a long-term mindset, the problem is a lot of people that come into this thing now, it happened last summer too, when the Sprott entity really gained a lot of traction. They ran the price up, and the price of the stocks got way ahead of the price of uranium. And you had a lot of retail come in chasing the flashy object. And then eventually the buying pressure exhausted itself. It was mostly retail. It's a very tiny market. The market cap of the entire nuclear industry or uranium sector is very tiny. And so if you can stand the volatility, and if you don't buy at the highs, so you're not like buying something and then, it's taking a 20 or 30% drawdown, a month later because you bought in at a, kind of a top. I talked about this at the last bull market. because these things are so volatile. It's like I showed several of the stocks that are still existing now, where they were up maybe 1,000 or 5,000% over the course of the 2014 to 2017, I think was the last run. But there was a half dozen drawdowns of 50% or more on that ride to five. And most people, you have to psychologically, get yourself ready for that, because people just, if they're not prepared for that, they'll say they're going to trade it, but then they'll sell. But when do they buy back? See, this is the problem people get into. So, but if you understand the cyclicality, if you understand the volatility, and you don't shoot your whole wad, you just kind of layer into this thing and then take money off, because you're never going to catch the exact top, then I think you can do well. And I think you have to set your expectations correctly too. If you just put your money into an S&P fund at Vanguard, a low-cost fund, and keep it there for 40 years, you're probably average 9% a year with dividends reinvested. Buffett averaged 20% a year over his career, all through his up and down years. He's the greatest investor in the world. So some of these guys are sitting on, 3, 4, 500% returns. They should take the money down and, count their blessings. But, they just think that that's every year, or I'm going to find the next mega uranium, or whatever the, Paladin, like Rick Rule, I bought it at 1 cent and it goes to $12. Probably not going to happen, but I think there's tremendous potential there, as you said. You're going to see all-time new highs in it. I mean, I see Kevin Bambro talking about this all the time, 200, easily, because if you have the investment of a reactor, you don't care how much the fuel costs. You're not going to shut down the reactor that you spent, $7 billion building.
So when it comes to investing in the energy sector, obviously we've been talking about a lot of different commodities here, so there's going to be different approaches for each. But what generally is the approach that you take? Do you focus on ETFs? Do you dive into the individual stocks? Do you do futures, options, anything like that? And as a follow-up, what would you recommend to somebody who's new to the space?
Well, let's start with the last part first. Somebody that's new, first of all, you need to do a couple of things. First of all, you need to understand that you can make a tremendous amount of money here, and that's what draws people to it. The problem is that you need to understand that it's cyclical, and that you have to understand the cyclicality, what drives that. You can go online and look up Pierre Lasson's curves and stuff like that, or it's just like intuitively in common sense, these things go from the price of a commodity goes up, that draws in, people that were not, all these mines weren't making money, they were shut down, mothballed, interest goes away, nobody cares about it. Price of copper, let's say, goes like over $4 a pound. So everybody starts investing money. So, but what's the time lag? That's what you're really trying to catch, is that time lag between when the new investment comes in and then when you get oversupplied again. So you have to kind of like look back in history, understand the cyclicality, and then you have to, I think, look in the mirror and understand your psychological. Most people don't do this. Are you prepared to buy something and have it go down 50%? And then the thesis never changing on the supply and demand, but yet because of the volatility, because of sediment, money flows, whatever, or Fed does the uranium supply demand dynamic care what Jerome Powell does at the next Fed meeting? It's irrelevant for the long. But the prices, these are stocks, and when the stock market's in a bear market, most stocks will go down. They may, some of these resource stocks may not go down as much, and they'll recover sooner, but they will go down. If you're in a bear market, 95% of stocks are going to go down. So I think people don't understand this. I see people all over Twitter, people need to be preparing their exit strategy now, I think, for some of these commodities, because, they're going to, if the economy is rolling over, I'm already seeing deterioration in some of the things I follow. So I think or indicators I follow. So you really got to prepare yourself for that. And then I think, go out and cultivate on Twitter's real good for a lot of things. There's a lot of big mouths on there, and there's a lot of people in FinTwit that are kind of jokers, but there are a lot of smart people that are running money, running funds, have had previous success. And what I would say is, cultivate that group of people that you're following and try to learn from them. You can DM these people, they'll talk to you, look at their histories, listen to what they're saying, why they're saying it. Obviously you have to make your own decisions, but if you're just starting out, you have to educate yourself. You can't just jump into this field and expect to have, especially if you're not mentally and psychologically prepared for that volatility. That's what I would say to most folks.
That's great advice. So it's been an awesome conversation today. I don't think I've ever had that much knowledge packed into one interview before. So I'm looking forward to rewatching this, honestly. Could you let our viewers know where they can find you about the Actionable Intelligence Alert podcast and your newsletter as well?
Yeah, I've kind of just whittled my presence down to my weekly YouTube video that I do. I just do a market review and just the ongoing dialogue with the people that are following along about what's going on in these markets in a general sense. And then that kind of loss leads into I have you can sign up for like a weekly email where I talk more in depth about some things. And then if you're really interested in these things and want some help on this, or are interested in kind of companies that I'm buying, or other folks that I work with that are buying, then you can take a subscription to the newsletter and we talk about specific stocks in there.
Great. Well, thank you so much for joining us. I'll make sure to put links to your YouTube as well as your newsletter in the description below, and would love to have you on in the future to continue the conversation.
Appreciate it. Thanks.
If you enjoyed my conversation on energy with John Polomny, you won't want to miss my interview with Justin Hune, aka the Uranium Insider, where we analyze what makes uranium such an attractive sector at the moment, and we break down all the different uranium investment options.